to share my experience as a real estate investor. I started investing in real estate in 2013, and for the longest period of time, I was only focused on Ontario. But what I found is that as Ontario's real estate continued to boom and appreciate, and I was constantly going after cash flowing properties, I started to move further and further out of the Greater Toronto area. So this is going to be a presentation where I'm going to share my experience investing in Alberta and what it's been like. I got my first property in Alberta in 2021. So yeah, that's kind of what that's about. So just a little bit of bio about me before we get started. My name is Zhvanetskiy. I'm a realtor with Remax Condos Plus. I'm in downtown Toronto. I primarily work in the Greater Toronto area, but since November, I started to also sell properties in Alberta and predominantly Calgary. I spent a decade in Toronto's condominium industry before becoming a realtor. I worked as the vice president of a service provider company. I've been pretty much in every condo in downtown Toronto at some point. I've conducted over 65 condominium assessments. I've been a real estate investor since 2013. And in 2022, I was in the top 1% in Greater Toronto area condo sales from over 70,000 Toronto Regional Real Estate Board realtors. And if you want to connect with me on Instagram, it's at alexzed.realtor. And I apologize in advance. This is the first time that I'm doing this presentation. It's not rehearsed. It's just basically just off the cuff. And I'm going to give you opportunities to ask questions at the end as well. So why invest in real estate? I guess this is kind of the starting point of the presentation. And, it comes down to real estate being a tangible, hard, physical asset, unlike investing in something like stocks or something that's even, something risky like, for example, cryptocurrency. Real estate, it's a basic human need. We all need food, water, and shelter to survive. So for that reason, it's always going to be in demand. Population continues to grow. There's only so much land that you can build real estate on. And our population in Canada is booming because we live in one of the greatest countries in the world, and people continue to move into Canada. It's a safe investment for the most part, as long as you're not finding yourself in a situation where you're over leveraging. And what I mean by over leveraging is, when you're doing speculative investment in real estate, basically hoping to buy in and then flip quickly, thinking that it's going to appreciate, you may find yourself in a risky situation, such as, people that, for example, bought pre-construction properties in late 2021 that are going to be closing late, like now or later this summer. And the property just doesn't appraise the way that it did before. But this is not investing. This is speculative investing. The best strategy in real estate, especially is basically a buy and hold strategy, where you buy into a property. You put a 20% down payment. You're gaining appreciation on the whole value of the property. And, the property is cash flowing, meaning it's paying for itself. And while it's doing that, that's really safe for you because you can actually just pick and choose when you would sell that property. And you're not going to be in a situation where a life change forces you to sell that property. For example, if you were to buy a property in downtown Toronto and having to put money out of pocket every single month, in addition to the rent that you have coming in from the tenant, that's more risky because if you have some sort of change that happens in your personal or professional life, you may need to sell that property just because you're not able to pay that difference, and that's where the risk in real estate is. So buy and hold is a great strategy, and you only lose money in real estate when you sell. I'm going to talk a little bit about why Alberta. So up till 2021, I was predominantly investing in Ontario real estate. I was constantly chasing cash flow. The first property that I bought was in Barrie. It was a pre-construction property. I bought it from the developer in 2014. I paid, I think it was $270,000. It was a freehold townhouse at Essa Road and Founders. It's a Sean Homes, if anybody's familiar with that part of Barrie. By the time that property was completed and closing in 2016, it appreciated almost 200,000. And then I went to buy my next property, and then that was already in Kitchener-Waterloo because the cash flow was just no longer available in Barrie. I was not able to buy a property anymore there where my mortgage and my monthly carrying costs will be covered by the rent. So I moved to Kitchener-Waterloo, then to Windsor. And then I was in a situation in 2021 where I was looking to buy another property in Ontario, and I was actually looking at Midland and Penetanguishene, which is north of Barrie. And there was a single family home that we were competing for. It was 520,000. We didn't end up getting it. And a friend of mine who's a very seasoned investor with a large portfolio told me about an opportunity that he learned about in Alberta. And this was not in Calgary. This was in Leduc, which is a suburb of Edmonton. It's about 30 minutes south of Edmonton. It's a suburb where a lot of people that work in the oil sands and, in the Northwest Territories and the precious metals and minerals industries live, and then they fly out there for a week or two of work, and they fly back and so forth. So I bought a pre-construction freehold house there. It was a full house with a legal basement. The realtors that were selling these, they had a property management package. Property management wasn't free, but they put me in contact with a property manager. And it was something that I was very hesitant towards because it's not a property that I can drive to, nor do I want to visit Leduc, Alberta. But the financials and the money made sense. So I moved forward. I purchased that property. It closed in November 2021. And it's been basically the smoothest real estate transaction and the smoothest, experience I've had as a realtor so far. Sorry, as an investor so far, because I have property management there. I pay them 6% of the monthly rent. They look after everything, all the day-to-day. I don't know my tenants. I haven't seen my tenants. I just approve them. There's been a little bit of higher turnover there, to be frank, because of Leduc and how transient of a city it is. But it's been very, very hands-off, where, the properties that I have in the GTA, in Ontario, I get calls, from time to time about things like pest control, or maybe, the tap is not working, or the air conditioner is not working properly. And I don't drive out there myself to look at this. I just, either contact my handyman or a contractor I know, but I'm still involved in the process. I'm calling the Reliance. I'm having them go out there. They're checking the air conditioner. They're reporting back. Like, I'm having to pay. I'm asking the feedback from the tenant. So I'm very much involved. Whereas in the property that I've had in Alberta, in Leduc, it's been basically, we did our inspection. This is what we found. This is how you rectify it. So it's been quite easy. I've owned that property now for 2 years. And it's been a really good experience. And when I got involved with Remax Condos Plus, and I started to see that there were opportunities to invest in Calgary, I was very comfortable with that idea because of the experience I've had in Leduc and Edmonton. And the reason is that I think that Calgary is a lot more similar to Toronto or to Vancouver. It's not as heavily dependent on energy, and all of Alberta's economy is diversifying now. So I was comfortable, and I moved forward with this, and I bought a property in Calgary. So that's what I'm going to be talking about for the rest of this presentation. That's going to be, what my experience was like purchasing that pre-construction property in Calgary. So, just a little bit about Canada and the immigration levels. We are expecting to get almost 1 million new immigrants within the next 2 years. Most of these immigrants are going to be settling in the Golden Horseshoe area. So, in and around the Greater Toronto area. Some are going to go to Vancouver. And, we anticipate that a lot of them are going to be going to Alberta eventually because the housing and the affordability is there right now. When I look at Calgary, what I see is what the GTA was 15, 20 years ago. Like, Carmelo, I think before the presentation, we kind of spoke about this, like your experience when you were going to Ryerson, correct?
Yeah.
Yeah. So can you share that experience a bit so that I can kind of talk about that?
I remember when I went to Ryerson over 20 years ago, like, I grew up in Vaughan, Woodbridge. So taking the subway down and they're building all these condos, and me and my friends were always talking about, like, who's going to buy, who's going to live here? Because downtown Toronto didn't have the same, like, all these condos that are there now weren't there. So imagine a condo that's currently 15 years old didn't exist 20 years ago. So, like, in the last 20 years, there's so many condos, like, who's going to buy it? Who's going to live there? And looking back in hindsight, I wish I bought, like, at that time, I think you're allowed to buy with, I think, 0% down payment.
Wow.
I wish I was able to buy, at a young age, just buy a property with not worrying about down payment, and life would have been so different.
Yeah, so hindsight's always 2020, but if we look at this chart, and this is Toronto's real estate trends, and the green line here is condo prices. So if we look at condo prices in Toronto about 20 years ago, in 2002, it looks like you could have bought a condo in the high 100,000s back then. I'm with you, Carmelo. If I knew what I know now back then, I was the age of majority, I could have bought properties. I would have bought as many condos as I possibly could. Toronto at that time in the late 90s and early 2000s, I remember this, like, people went downtown to work, and then it was pretty much just a ghost town in downtown Toronto. Everybody went to the suburbs to live, and nothing happened on the weekends, and everybody just kind of lived in the burbs. Calgary is going through something very similar because a lot of people are now migrating there, from other parts of Canada. And there is just a lack of housing there, a lack of available housing. So they're building more condos, more housing, and the construction out there is simply booming. So what I wanted to do is, sorry, this is a little bit about my story that I already talked about. But what I wanted to do is I wanted to kind of compare, in November of 2022, when I went and I bought that condo in Calgary, which is a pre-construction condo, it's going to be completed in 2027 in downtown Calgary. It's called the Broward, and kind of how that would compare to if I was to buy a similar property in downtown Toronto. So this is a condo called Queen Church. This is going to be at downtown Toronto at the corner of Queen and Church. It's in pre-construction. It's going to be completing in 2027, similar to the Broward. To buy a one-bedroom condo at Queen and Church, you're looking at $775,000. It will be a one-bed, one-bath, 480 square foot condo. It's $1,600 per square foot. The monthly maintenance fees are $389. The estimated monthly property tax is going to be $408 a month. And to get a parking spot, you need to pay $125,000, and parking spots are only available for condos that are at least 3-bedroom units. And the deposit structure is 5% due on signing, 5% due within 120 days, 5% within 270 days, and then 5% in 450 days. So within 450 days, you basically have to provide 20% of $775,000, assuming you're not, well, with this unit, you can't even get a parking space. Which is going to be about $140,000. This is the average rent in Toronto. So today, that property would rent out, that one-bedroom condo at Queen Church would rent out for about $2,400. We're going to project a little bit into the future. Last year we had really crazy rent increases that were driven by just an imbalance in supply and demand. But if rent continues to grow at a 10 or 15% a year pace, by the time that property at Queen Church is completed, you're going to be able to rent it out for $3,100, roughly, maybe a little bit more. And now I'm going to compare it to what I bought, and then I'm going to kind of break down both side by side. So this is the Broward. This is located, at 15th Avenue and 2nd Street in downtown Calgary. This is walking distance to the Red Mile. It's kind of like buying a condo at King and Spadina or King and University in downtown Toronto. The property was $800 a square foot. So here's what I've got. This is the exact condo that I got. So the property was $439,000 plus GST. The monthly maintenance fees were $229. It was a 488 square foot, 1-bedroom, 1-bath. And here's all the perks that I got here on the left. So To purchase this property, I only needed to put 10% down. So far, I've only done 5%. The balance of that 10% is going to be due next November or this November. I got all of these perks as well for free. So I got a free parking space. I got a free storage locker. I have a 2-year rental guarantee from Truman Homes, which I'm going to talk about. I have a 2-year free property management services by Empire 81. I'm going to talk about this as well. I also have a promotion that I got with them, which is 2 years, no condo fees. They also have a hassle-free exit, hassle-free MLS exit, which I'm going to explain later. And there's also free assignment. So assignment is basically selling the contract for that property. So if before this property closes, if I'm not looking to close on this property and I want to maybe sell that contract to Carmelo, Truman Homes would allow me to assign it free of charge. In the Greater Toronto area, a lot of developers don't allow you to assign properties, and even if they do, you're looking at fees between $10,000 and $20,000. And full disclosure, I mean, it's not totally free assignment. I would have to pay Truman Homes lawyer fees, which are probably going to be about $1,000 or $1,500 to assign this condo, but it's essentially free. This is for my agreement of purchase and sale. So it just basically shows that this is my rental guarantee that I'm getting for 2 years, $2,199.50, whether the property sits vacant or is leased. And I have my management company, Empire 81, is going to be managing it for 2 years. So here's the breakdown. So here's the condo on the left, Queen and Church in Toronto. The purchase price is $775,000. In order for you to purchase this property, you'd need a down payment of 20%, a deposit of 20%, which is going to be $140,000. And that's going to be due within 450 days. That's a really hefty chunk of money. And for a lot of newer investors, it's difficult to come up with this kind of money in 450 days. The maintenance fees are $389,000. Parking is $120,000, but it's not even available for this unit. You would also need to pay a real estate agent to find you a tenant when this property closes, and you may or may not be able to assign this property. And then on the other side, you see the Broward in Calgary. So this property is $440,000. Your down payment or deposit is in total $88,000. And the reason why we put this down payment 20%, because as much as for the Broward, you only need to do 10%, when the property is actually completed in 2027 and you need to go get your mortgage, because it's an investment property in Alberta, from my experience, you're going to need at least 20 or 25% down. So we're going with 20% down just to kind of even the playing field. So the deposit is $44,000, which is due in the first year, and that's 10%, and then nothing due until 2027. The maintenance fees are $229, but they're forgiven for the first 2 years. I'm going to cover that in the next slide. I get a free parking spot, a free locker, I get a rental guarantee, free property management, free assignment, and all these other perks that I talked about in the previous slide. So here's your cash flow analysis, and this is the main reason why I decided to invest in Calgary, is because, simply put, in the Greater Toronto area, it's not possible to find a property that's going to be cash flowing. So in order for this cash flow analysis, right now we're in a high prime rate environment. So the interest rates that we have right now, which are in the 5%, are, nobody has a crystal ball, but I used 4%, which is a little bit more. It's still a conservative number. It's realistic, and it's something that we can expect in 2027. So based on a 4% mortgage, that property at Queen and Church in Toronto, even if you're getting $3,100 a month, you're going to have to put $713 out of your pocket every single month to pay the difference between the rent and your expenses. And this is high risk, because if you have some sort of life-changing situation and you can't come up with this, you're going to be in a position where you may need to sell that property because you can't afford to maintain it. Whereas in the property that I bought in Calgary, even with the rental guarantee, right now a condo in downtown Calgary rents out for about $1,900. So this is a conservative rental guarantee. I may not even go with this rental guarantee, and I have the option for that. If when the property is completed in 2027, I want to just use a real estate agent locally to find me a tenant because I can generate higher rents, I have the right to do that. I don't have to go with this amount. But let's say I did. So when I take that rental guarantee, I subtract my mortgage, my property tax, my condo fees, my landlord insurance. With the 2-year promo of no condo fees, I'm going to be cash flowing $318. Without it, it's going to be $89. So this is a much safer investment because basically you can purchase this property, you can hold it, you can let the property pay for itself. Your rent is going to be covering your expenses. You're going to be paying down your principal. And essentially what you're going to do for yourself is you can create a retirement plan for yourself. So investing in a pre-construction property today, 25 or 30 years from now, is going to create, once your mortgage is paid off, it's going to create a substantial cash flow that can support you. And as you're going to be paying down that mortgage, you're going to be getting more and more cash flow. And you're going to have also this asset that you can use, you can refinance. You have a lot of options of different things that you can do with this funds. So this is the main reason why I bought in Calgary. This just simply made sense for me. So a little bit more. So I'm just going to talk again about the perks that I got with the property. So, Truman Homes, which is a local builder in Calgary. They've been building for over 35 years. They do hire their own trades as well, and they own their own trades. The projects that they offer come with a 5 or 10% deposit plan. The project that I got, it had a free parking and locker. There was no condo fees for 2 years. I got some suite upgrades. There's a free hassle-free MLS exit, which I can explain. Basically, what this means is that after the 2-year rental guarantee is done, if I want to sell this property on the MLS, there's a $500 fee for Truman to list it on the MLS for me, and I would not be responsible for the selling agent's commission. I would only be responsible for the buyer's agent commission. So I'm basically going to be saving half my commission if I wanted to sell this property. There's free assignments, and there's a 2-year rental guarantee that comes with free property management. The real estate market in Calgary has started to appreciate, especially as people started to move into Calgary. These are some stats about Calgary. It has the highest wage per employee in Canada, lower cost of living. It has an international airport, which is one of the main reasons why I was attracted to investing in Calgary, because when you have an international airport, that gives you more opportunities for businesses to establish headquarters there. There's no HST, there's no land transfer tax. The landlord legislation is a lot more favorable there. So I'm going to talk a little bit about that too, the difference between being a landlord in Alberta and being a landlord in Ontario. There's no rent control in Alberta as well, whereas in Ontario, there is rent control on properties that were occupied for residential purposes prior to 2018. So the government basically sets out how much you can increase rent. And the only closing costs in Alberta are your legal fees. I got this from the Alberta Real Estate Association website today. It just basically shows the appreciation and the lack of inventory, which is, one of the, kind of trends that we have right now nationwide. Like, sellers aren't running to sell, but at the same time, because there's all of this migration into Calgary and people are moving out there, developers are building, and the city is growing to be able to support all of these people that are going to be moving into the city. These are some businesses that have recently relocated their business into Calgary. So DH Canada, so they build propeller planes. They relocated their manufacturing plant and corporate office from Toronto into Calgary, as well as the people that were working in Toronto for them are now all being transferred into Calgary. Amazon is, bringing 950 new tech jobs into Calgary. There's also, this Green Impact Partner. So basically they're building, an energy facility that's going to be able to use wheat and convert that into energy. And this is going to be bringing more economy into Calgary. So they're basically, what Alberta is doing is they're diversifying themselves so that they're not going to be so dependent on oil prices. And the lower cost of living is driving more startups and more technology-based companies into Alberta to help them diversify that. A little bit about being a landlord in Alberta versus Ontario. So I mentioned that there is no rent control in Alberta. In Alberta, fixed year tenancy ends at the expiry, so it doesn't go to month like it does in Ontario. damage deposits are legal and permitted. In Ontario, they're not. You can take the last month's deposit, but you can't use that towards damage. Pet provisions are enforceable, and the wait times for landlord-tenant board hearings in Alberta are between 2 to 4 weeks, whereas in Ontario, you may have heard the news, it can be 8 to 10 months. Unfortunately, there's been some, news coverage about, landlord-tenant issues as of late and throughout COVID in Ontario as well. So Alberta is a lot more investor-friendly, and it's a lot more landlord-friendly. Some of the properties and projects that are available in Alberta right now, one is Horizon, which, there's condos that are starting in the low 300s. This is in the east end of Calgary. They come with rental guarantees, they come with property management, free parking, and it's basically only a 10% deposit until 2027. Most of the all the one-bedroom units have sold out. They only have some 2 and 3 bedroom units available right now, which start in the mid 300s. There's also Chelsea Freehold Properties, which are, there's freehold opportunities available there too for those that are not looking to invest in condos, where they also come with, rental guarantees and opportunities to do things like finish the basement and, create a separate entrance for the basement for a second property. And the project that I bought into, the Broward, has sold out mid last week. There are new properties going to be coming to Calgary by Truman Homes mid-May. One is Imperia, which is going to be in downtown Calgary, and then there's also Orson, which I don't have too much details about, but Imperia is going to be launching in mid-May. So that's just basically about my experience.